This video is an Uncovered Japan company research report on Chugoku Marine Paints, ticker 4617. CMP is a Japanese specialist in marine coatings, the anti-fouling and anti-corrosion paint applied to ship hulls. Its investment story starts with a practical idea. A cleaner, lower friction hull can reduce fuel burn, and that matters more as shipping works to meet tougher emissions rules. At the report's 2 June 2026 reference price, CMP traded at roughly 14.3 times trailing earnings, with a 3.15% dividend yield, 11.5% return on equity, and about 21.7 billion yen of net cash. The report's scorecard is 14 out of 20. That frames CMP as a high-quality specialist with structural tailwinds, but not as an obvious bargain. Marine coatings are not ordinary paint. CMP's anti-fouling products are applied below the waterline to keep hulls smoother and reduce marine growth. The company sells to two linked markets: new-build vessels at shipyards and repair or dry dock work that recurs through a ship's life. Its Seaflow Neo series has been used on more than 3,000 vessels, with an average reported fuel reduction of about 7.4%. The headline financial change is the margin recovery. Revenue rose from 843 billion yen in fiscal 2022 to 1,393.6 billion yen in fiscal 2026. More important, operating profit climbed from 6.9 billion to 174.4 billion yen, lifting the operating margin from 0.8% to 12.5%. The report attributes that repair to better pricing, higher value product mix, and an easing in raw material pressure. CMP reports by geography, because the same marine coatings product is sold across 5 distinct local markets. Japan is its largest region, but has the lowest margin, at 5.2% in fiscal 2025. Southeast Asia is smaller, but delivered the highest margin, 20.3%. Korea shows the scale of the recovery, moving from an operating loss in fiscal 2022 to a 13.1% margin by fiscal 2025. For CMP, operating and recurring profit are more useful measures of underlying earnings than net income alone. Operating profit rose in a clear staircase to 174.4 billion yen in fiscal 2026. Net income fell from 137.2 billion yen to 110.0 billion because prior year gains from selling cross-shareholdings did not repeat. The underlying operating business improved, even though the reported net income line became noisier. Cash flow tells a similar turnaround story. Operating cash flow was negative in fiscal 2022 and nearly flat in fiscal 2023, as working capital absorbed the growth. From fiscal 2024, it moved above 120 billion yen and reached 144.2 billion yen in fiscal 2026. Free cash flow reached 159.8 billion yen. Together with an equity ratio of 60.6%, that left CMP effectively net cash. The report's moat argument is not that paint is inherently scarce. It is that coating performance affects a shipowner's fuel bill and maintenance schedule. Once a product has a credible track record, owners can specify that brand at the shipyard. Every coated vessel adds performance data, and that data can reinforce the next specification win. Repair demand then gives the business a recurring element beyond the new build cycle. Management's stated ambition is world top share in marine coatings by 2030. The concrete plan is to expand silicone-type capacity across the Netherlands, Japan, and Malaysia, while holding on to the pricing and product mix discipline that repaired margins. The opportunity is supported by the shift toward fuel-efficient shipping. The key execution tests are whether CMP can sustain pass-through pricing and close the scale and brand gap with its European competitors. CMP's shareholder return profile is another part of the case. Across fiscal 2022 through 2026, the report estimates roughly 177.7 billion yen of dividends and 49.5 billion yen of buybacks. The company has held a dividend on equity rate around 6.2% since fiscal 2024, above its policy floor. Dividends per share rose from 35 yen in fiscal 2022 to 111 yen in fiscal 2026, though investors should still watch the policy against future earnings and cash needs. The report treats valuation with caution. At 14.3 times earnings and 1.65 times book, CMP looked roughly sector median rather than deeply discounted. Its author's fiscal 2029 scenarios span from around 2,000 yen in a bear case to about 5,150 yen in a bull case. versus a 3,175 yen reference price. Those are estimates, not company guidance or price targets. They underline the main risks: raw materials, shipping cyclicality, foreign exchange, and competition. To sum up, Chugoku Marine Paints is a top-tier marine coating specialist with an evidence-backed fuel efficiency proposition, a stronger balance sheet, and substantial cash generation. The constructive case is shipping decarbonization plus share gains. The counterweight is that earnings remain exposed to materials, freight conditions, currencies, and capable global rivals. This is not investment advice. It is a framework for following the evidence as CMP executes. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.